Hi, Matt McAleer, July 19th, just after the close. Bond market, lullaby this week. Very quiet, traded in a range, not a ton of volume, not a ton of offerings. See what the next couple of weeks bring. Equity market, a little bit of summer doldrums. We spoke last week about that 28, let's call it 2,900 to 3,000, 3,025 in the S&P being a grind area. That continued. We've tried to move through it a couple times. Supply shows up. Some of it headline driven, but it's still supply. For example, today off that nice Microsoft number last night, you saw good strength in the market. And through 2:30, quarter to 3, that strength continued. You did get the headline news about Iran seizing a British tanker. We don't know details of that. We'll see where that goes over the weekend. It's type of headline news that can move markets short term. We'll see what gets priced in over the next few days. What we're trying to look for are extremes. Are we seeing any extreme optimism where we think we need to fade or sell into that optimism? It's starting to show up in a couple of places. Last week we mentioned that some of the weekly momentums in the indexes were getting up into an area that sometimes generates selling, can have used most of the oxygen was a term I used, getting there. Saw that a little bit. Last Friday, and those numbers don't come out till after Friday, speculators in the options market were very aggressive call buyers. I've mentioned in the past, we like to keep an eye on the equity only put call ratio. Why the equity only and not the index, which covers the S&P or the Dow, and index options ratio? Equity only tends to be the speculators ratio that we look at. We want to fade or lean into speculative action at extremes. What are extremes? Go back to last December. In one of our notes I mentioned that the equity-only put-call ratio had jumped through 1. That's an extreme number for us. When we see more puts being bought than calls, we have to start nibbling. We have to start pushing money into the market, even if it's uncomfortable. Right now, that equity-only put-call ratio is starting to show some minor extremes, funny terminology, but some early extremes on call buying. That's something that will make us nervous if it continues. We don't like to see speculators being heavy call buyers. Why? Speculators tend to be wrong at extremes. They are underfunded and very aggressive and tend to be trend followers. Late to the move, both in the aggressive, the upside and the downside. So that's what we're looking at. Again, we'll take it day by day with this earnings season. Had to be impressed by Microsoft, one of our holdings in tactical trend. We'll see if that action or that earnings power was specific to Microsoft or broad over technology. Some of these forward numbers on Microsoft are probably going to get rejiggered higher. And this move over the January to July 19th move from par 100 up through 140 earlier today, maybe early in the game. We'll see. Special guest speaker next week, guest commentator, because I will be in one of my favorite places on earth, Saratoga Springs. Saratoga Springs in the summertime is like taking a trip back into about the 1870s. Great racing, Lake George, 30 minutes to the north, wonderful spot. If any of our friends or clients are up in Saratoga next weekend, get in touch with me. Love to see you. Everyone have a great weekend.